You were listening to chartingwealth.com for Tuesday, the 21st of November, 2017. We see stocks are mixed for the day. The S&P 500 up 0.17%. The Qs, the NASDAQ 100 down 0.08%. We see 20-year bonds down just barely 0.04%. And gold down quite a bit, 1.26%. Let's jump right into the S&P 500. We are still in a confirmed up move, but it appears, particularly with the week starting off as weakly as it has, that the S&P 500, after the prior week that was a doji, which means lots of indecision, a red doji, tending down, what we see happening in the current week is a bit of a move up, a small move up, 0.17% on Monday, but because of the way that the Heikin Ashi candlestick measures it in the average pace, when we start looking at what's going on the derivative oscillator and the price percent oscillator, we can see that those oscillators are continuing to lose upward momentum. And when we look at where this move is, it is still within all the range of movement over the course of the past week. And in the prior week, that is the week ending the 10th of November, 2 weeks ago, it is barely above where that week ended. So again, we see a real blowing off of all that strong upward movement for literally 11 weeks, things sliding sideways, tending down. And again, derivative oscillators continue to lose energy. And again, it's just the first day of a 5-day that is the weekly candle, but that's what we're seeing so far. And again, don't forget this is a shortened trading week. Markets are closed on Thursday for Thanksgiving and a shortened trading day on Friday. Do encourage you, please read page 104 of your Stock Trader's Almanac. If you don't have one for this year, I'm sure you can get the rest of this year's for a discount, but I very much encourage you, ask in your stocking, be placed a copy of the Stock Trader's Almanac 2018. So anyway, it's really my go-to book. It's the one thing that I buy year in and year out. So much great advice. Yale and Steve Hirsch have tracked these markets for decades, starting with the father Yale and then taken over by the son Jeff. I'm sorry, I was saying Steve. I have a friend named Steve Hirsch. Jeff Hirsch, please make sure to have a copy of that. It shows you trends, analysis, all just great stuff. And it's got a great little trading strategy going into this week. Page 104. It is copyright material and I will not explain it on my show. But when we have Jeff on the show, I'll let him explain that and many, many other things to you. Let's keep moving through. So we see things sliding sideways. Again, derivative oscillator and the price percent oscillator losing energy. 2-day chart, we can see where it's trying to recover. It has pierced through a very weak 2-day trend line and is still below the weekly trend line and still gaining downward momentum on the price percent oscillator and the derivative oscillator. What do we see on the 4-hour chart? We saw some up movement in the morning, a spinning top, and then a candle with a wick on top in the afternoon. Hasn't crossed over going up yet. However, the derivative oscillator has, but the price percent oscillator hasn't. And again, when we go all the way back to the big up move on Thursday the 16th, we really just see a sideways slide for the last 2 days on Friday and Monday. So we'll continue to watch, see what we see, keep waiting to see if everything's going to roll over, particularly with the S&P 500, or is it just resting, gaining energy, and getting ready to move up again? We don't know. We're trend followers, and once we get a good trend, that's what we'll go with, and we'll keep you guys posted. Okay, what's going on the Qs? The NASDAQ 100. It also has been sliding sideways now, going on about 3 weeks, although it is a little higher so far with the launch of the new week. And again, for the day, down 0.08% from where things opened. But we see the Heikin Ashi candlesticks. Again, we use Heikin Ashi for a certain reason. It means average pace in Japanese. If you haven't taken our training, please go to chartingwealth.com and listen to it, watch it. It is very important. We have it on both the YouTube channel and at and at chartingwealth.com. So please listen to it there. I do encourage you, though, to look at the way things have been sliding sideways going on 3 weeks now. Derivative oscillator is gaining just a little bit of energy. Price percent oscillator flat. So again, are we topping out? We delve in a little deeper. 2-day chart, pretty much a sideways slide, trying to gain a little bit of energy, up a little over where things were back on Tuesday the 7th, where it reached its high. So we do see things moving up over the last two-day candles a little bit going back in time, but derivative oscillator continuing to move down and the price percent oscillator continuing to move down, both of them on the 2-day chart. Let's look and see what we see on the 4-hour. We see that things peaked out in the afternoon on Thursday the 16th and have been trending down since then. Again, the Qs, the NASDAQ 100 down 0.08%. Price movement still above the 2-day trend line and the weekly. And of course, what have we been waiting for? To see if there's going to be a rotation over and some strong up movement upward, while the weekly and the 2-day charts are still positive. If you see the 4-hour rotate over going up, might be a chance for you to jump in and ride some up movement. Folks, what do you notice about the Bollinger Bands as we look back? Lots of movement as we had some big climbs, but as the Bollinger Bands get tighter, what does that mean? It means volatility is lessening, and it is lessening quite a bit. So we'll continue to just watch, see what we see. We'll keep you posted if and when we see trends developing that offer opportunities for virtual trades. Remember, we're not a stock calling service, we're an education firm. We don't give you trading advice, but we sure want you to learn how to practice trade with us, and you can take what you learn from us, combine it with your other knowledge, and become a market master. That's what we'd love to hear. What do we see going on the weekly on TLT, the 20-year bond? Well, as the S&P and the Qs have been, again, topping out and tending to trend down, we see that the inverse, typically money flows when the market's not doing that well, stock market into bonds and gold. And we see, and again, not always true, but that's sort of the way it's been in the past. What do we see happening? Well, we see that the 20-year bond is still in a confirmed down move on the weekly, although getting close to crossing over, hasn't happened yet, going up. But we have 4 weeks of up movement. We'll continue to watch that. Derivative oscillators continuing to lose downward energy, and price percent oscillator seems to be moving closer to a crossover. We, of course, had a crossover back on the 3rd on the 2-day chart. It went up till it peaked out in the afternoon on Tuesday the 7th, then a down 2-day candle, a strong down through Monday the 13th, and then the last 3 2-day candles we see stronger upward movement. So we'll continue to watch things and see what we see. Latest candle we have is only the first day of the latest 2-day candle. It will end on the 21st, so it's really 5 days of movement. Those 3 candles so far. Derivative oscillators losing some energy, but the price percent oscillators continuing to move up. What do we see on the 4-hour chart? We see again it sliding sideways pretty strongly. You know, it peaked out. Well, it hit. It basically has from its peak, its highest of highs recently on the afternoon of Wednesday the 15th. It has really slid sideways since then, again, tending up. Derivative oscillator, price percent oscillator still up. All the derivative oscillators losing energy, price percent oscillators gaining energy. We'll just continue to wait and see. We got some schizophrenia going on now. 2-day charts up, weekly charts down, till those rectify in one direction. We get a pullback on the 4-hour. We don't have an entry point. We'll continue to watch things. And lastly, we will go to gold. Gold down big, 1.26% for the day. Gold still in a confirmed down move on the weekly chart. Remember, all things being equal, market tends to move in the direction of the largest chart. That's the weekly, although you guys remember how big a deal our 4-hour chart is for us. We see, however, in gold, the 2-day chart rotated over going up back on Friday the 17th, that 2-day candle ending at that time. What do we see it doing the first day of the latest 2-day candle? Basically, I have a red spinning top, almost a doji. So again, this is on the Heiken Ashi candlestick. The movement, as far as the Heiken Ashi goes, we've got movement between the upward movement on the past 2-day candle. So we do see derivative oscillators gain some energy. Price percent oscillator tends to be heading down. Let's zoom in a little closer to the action. What do we see? Of course, the 4-hour had been sliding sideways, popped on Friday morning, popped up Friday afternoon, and then slammed way down on Monday. Down in the morning, down hard in the afternoon. Is it going to cross over going down in the morning, or is it going to pop back up? We don't know. Remember, as we get closer and closer to December, December is the month when we have our 4-hour chart stop working for us, typically about mid-December through mid-January. We shall wait and see, but strong down movement in gold. We'll see if that's enough to cross over going down. It could pop back up in the morning. We've seen that happen before with gold. So that is where we are at this point as we end the day on Monday, the 20th, and go into Tuesday, the 21st, in the shortened holiday week. If you have questions, problems, concerns, we love to hear from you. cw@chartingwealth.com. Keep with it, my friends. Keep using your daily market worksheet. Fill that out every day, 10 minutes as you listen to us. Then over the weekends, you fill out that weekly market worksheet for Monday's podcast. We'd put it out on Friday afternoons, evenings typically. You can listen to it on Sunday or before the market opens on Monday. And then, of course, we have our trade worksheet for you to do your practice trades on. It provides you with a great trading journal, which will give you all you need to hyper-accelerate your learning and your trading. God bless. All the best from the entire team here at Charting Wealth World Headquarters.